The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida. It's nice enough to come on and talk about what's happening in the world of commodities. Shawn, how you doing this morning?
I'm doing really good, Casey. Always good to be on your show talking about ag prices. So I'm always looking forward to a riveting conversation yet again. So
You and I both, my friend. You and I both. So we're trying something different here. Basically, if you're a subscriber to Shawn's service, you get this podcast a few days earlier than everybody else. And I think there's a way for you to go. I think I have it set up correctly that you can see it live as we go through. So if you have any questions, feel free to reach out and ask those questions, and we will go from there. So Shawn, let's go ahead and kick it off here. We had a report come out Friday. Had some bearish news come out. We had some other weather events come along. Some big rains came through the area due to Hurricane Burl, and we saw that come through the eastern Corn Belt. So I guess, Shawn, talk a little bit about what you saw there from the report and your reaction to that.
I think we have to kind of look at how these grain markets have been layering and why we've been getting this crash market. First of all, we had this crash in the Brazilian real. which always is a negative because we lose competitive advantage to Brazil. So we had a crash in the real. Secondly, the one area that had been really problematic for dry weather and dry soils was the eastern grain belt. As luck would have it, Beryl came in and brought rain right into that core eastern grain belt, alleviating those fears short term. Obviously, everyone, that increases or improves the pollination process here at a critical time. And if you had to dial in when you'd want moisture to come in, it came in right when it's just one of those things. You can't predict storms, when they're going to occur, where they're going to go. Another bearish layer. Then this report on Friday, which was actually constructive. It was actually bullish for corn and soybeans, meaning the ending stocks numbers were down from what everyone was expecting. And on corn, they lowered old crop corn stocks significantly from what they had been saying all along. We have talked about how we believe they overestimated that 177 yield and they'd have to come down. And they significantly did that. And I think they're going to do more of that in the next couple of reports. In the ending stocks, really was constructive. The next shoe to drop is reducing harvested acres. They're very conservative. We think they'll reduce harvested acres probably by 500,000 acres. We think they probably won't admit more than that, but we think at least we get that. But that will help. And but unfortunately, somehow the consensus got the winter wheat crop production yield way off, meaning they got surprised at how large the wheat yield was and how large the production was, which of course increased wheat ending stocks above expectation here in the US. And it just set off a fireball decline in wheat. Despite bullish reports for corn and soybeans, that just took the fire away from corn and soybeans, which were trying to rally, and created a downswing that carried through yesterday. And it looks like today we might finally be stabilizing. And then lastly, of course, ever since the debate snafu, where it appeared somehow, some way that, it was a surprise somehow that people didn't really realize that Biden might have a cognitive problem. That sort of had everyone talk about, we need to find a replacement for Biden, and that Trump's chances for winning went up dramatically. And then, of course, the assassination attempt on his at his recent rally increased the odds even more. There's a sympathy effect, Casey, in elections. Anytime that somebody who's running for presidency has an assassination attempt on them, there's a sympathy vote. There are people that will vote for that candidate in sympathy of. It's just a psychological thing, like Bolsonaro, the last election in Brazil, when he was stabbed and almost died but made it. It was viewed that prior to that he was actually behind in the polls, and after that he was well in the lead and won by a comfortable margin. So the market is basically saying Trump is going to get in, if Trump's going to get in, it means he's going to rip the tariffs apart to the upside. He's going to escalate the trade war with China, and then whatever exports we still have with China, which aren't much anymore, by the way, we might lose it all for forever and ever and ever. And so this is what's been piling and gaining confidence, and why the shorts have decided that they're comfortable being record short as a percentage of open interest in the grain markets. I'm not saying all of those are reasons to be. I'm not saying all those are correct assertions, but that's what's in the market today. My job, your job, those listening to the show's job, what are we going to be talking about 6 months from now? What are we going to be talking about 9 months from now? What are we talking about 3 months from now? Because all you hear is what's in front of you. I know what's in front of me. Everyone knows what's in front of us. Yet that's all everybody talks about. We need to know what's going to be in front of us in the future, because that's what the price is going to do. It's going to react to what's going to be in front of us And I have a sneaky suspicion that all the focus on these bearish pillars that I mentioned and ignoring a lot of the bullish pillars that are out there, I've gotten carried away. Meaning we're trading maximum bearish outlook. We're trading the maximum supply theoretically on spreadsheets that we possibly can. And over time, we're going to keep chipping away. One way to chip away at it is to get strong demand. Corn and wheat in the last 2 weeks have seen year over year export inspections grow 30% year over year. That is a big, big number. And so what I think is going to happen, we're going to keep getting these, Casey, week after week after week. And guess what? In the next USDA report, guess what's going to happen to the demand, the export numbers? They're going to keep ratcheting them up. They're going to take those harvested acres down. And guess what? The old crop stocks are going to keep coming down because they still aren't right, in my opinion. And all of a sudden, our ending stocks continue to look potentially less bearish, right? I mean, this is what I think is going to start to happen. Now, no doubt Burl certainly was helpful, and it's going to create definitely a better outcome for pollination in those areas. And by no means does anything look bad for the crop for corn. But we're talking about, where is the market in psychologically, and where I think we're at psychologically is they're just, so then, of course, Russia, Ukraine, 105 degree temperatures. This is the second week in a row. They're getting this during corn pollination, fourth largest exporter region in the world. No one's paying attention to it because they just want to be bearish, Casey. They want to be bearish. That's what I'm saying is like at some point you run out of reasons to be bearish, and all of a sudden you start noticing these other things. The corn crop in Brazil, it was way off from last year. No one's paying attention to it. If you look at the subsoil moisture in Brazil, it is in the lowest 2 percentile in recorded history. Deep layer. We're talking about 1 meter down. It's in the lowest 2 percentile, meaning they have absolutely no subsoil moisture in 3/4 of the country going into the planting season because the drought never stopped. The drought we had, it never stopped. It's going, and everything that I see with a more neutral, like we're not in La Nina, we're not in El Nino, it means we're going to continue to support that drought well into the first half of the growing season. That means less acres planted. It means poor emergence, poor crop conditions. Of course, that's not today, Casey, when they start planting in September, right?
Right.
But that's what I'm trying to say. You have to look what is going to be in front of us 3 months, 6 months, 9 months. We have never had a situation where Brazil was deprived of 1 meter of subsoil moisture ever like this, ever. It's never happened before. And yet no one is concerned about it. Okay, I get it. What about the situation in Russia, Ukraine? Subsoil moisture 1 meter down is in the lowest 5 percentile of historical precedent. They're going to be planting that winter wheat crop here in September.
Yeah.
I don't believe this drought at all is going to be going away anytime soon. How are they going to plant? How many acres are they going to plant in soils that have absolutely no subsoil moisture like that? How many acres are they going to plant? And the acres they do plant, what kind of stands are they going to get before they go into dormancy? What kind of crop quality they're going to have? That's not today, right? But it's coming. It's not that far away from being in front of us. And I could go on and on about lots of other things, but what I'm trying to say is the market has tunnel vision at times. It decides it only wants to see what it wants to see. And right now, everyone feels that being on the left side of the boat is the right place to be. And everyone sees more people going over there, so they keep going over there. And then more people going over there because people went over there. Monkey see, monkey do. And at some point, if too many people get over there, you capsize the boat.
Right.
And I believe we're at the point where we're about to capsize the boat. And when that happens, the people who are on that side, don't have a very good outcome. If you look at relative value, it's one of our really it's something we pay attention to a lot in every commodity, because it's kind of like the PE of a stock, or stocks. It's a way to measure valuation. Corn relative value and wheat relative value to all other commodities are in the top 3 lowest valuation in 45 years. When you look at any time that we've been anything close to this type of mispricing relative to all other commodities, it has been a harbinger of a major low. It doesn't mean we can't go lower tomorrow. It doesn't mean we can't go lower next week. We're talking about longer term, 1 to 3 month kind of a window. It says that farmers that make cash sales when corn is this undervalued are going to be locking in our view, the minimum amount of income on the farm possible, which is not what you're trying to do as a producer. So, that's where we think we're at. And sure, doesn't mean that we have to turn around, on any particular day, any particular week. But one day all of a sudden, we're going to be on the show, Casey, and we're going to be talking about corn up 15 to 20, and everyone's going to be talking about all these bullish things that are out there.
Right.
And so I don't know when that's going to happen. Maybe it's a month from now. Maybe it's tomorrow. Maybe it's this afternoon. Maybe it's 2 weeks from now. But we are pushing on a string from a sentiment, from a capital positioning, from a valuation perspective. We're pushing on a string, and that's where we're at. So I think the benefit of having all these things piled up is it's hard to find what else you can be bearish about now. Our U.S. going to have a big corn crop. Okay, Trump's going to get in. Okay, what else can we pile on here? We're at some point you just can't do it anymore.
Yep.
So.
Yep. No, I think you're right. There's a lot of things laying out there that are trying to make their way to the surface, but people are still trying to get their way, kind of figure their way through it. And like you said, the shorts want to stay short, and they don't want to switch over to long positions right now. So we saw a brief glimpse of that in first part of June, but
I want to be very, very clear. Just because they're record short does not mean they have to reverse anytime soon. Okay.
Right.
I'm going to be very clear. Just the fact that they're in this position doesn't mean that they have to turn around anytime soon. They can persist this way for a while. What it does say is they're running out of ammunition to do much more. And what it does say is that it wouldn't take much of a change in sentiment to get some of them to start buying back. And just look what happened with the wheat market over the spring, Casey. We went from like 550 wheat to like 750 wheat in a month.
Yeah.
On short covering. I can tell you nobody was anticipating that move. I was anticipating a rally. I wasn't anticipating a move that large. It exceeded my expectations, and I was bullish. Okay.
Right.
So don't underestimate the power of what short covering can do if something triggers a momentum event. Because remember, everything is momentum. Stocks are all momentum now. Commodities are momentum. So if the momentum just starts going up, and all the speculators and the algorithms and the computer programs that are trading are momentum traders, well, hey, it's moving up. They're just going to chase momentum, period. And then they'll make up the stories as they see fit to justify, why they're doing what they're doing, whether real or imagined. And that's, for better or for worse, that's the markets we are in, at least right now.
Yep. All right, Sean. So let's talk about this real quick. I want to hit on this because of the situation that we're seeing right now this week. Incredibly warm weather moving across the area. Started out in my neck of the woods out west and had 105 degrees. I'm in Wichita, Kansas right now. Yesterday for about 4 or 5, this is about the third day in a row where they've been 95 plus and high humidity. Yesterday's high, I think, was like 101 or 102 or something like that. Huge heat indexes. The nighttime cooling down into like, low 90s basically. Sean, as you take a look at what's going on now, as you see this weather pattern that we're seeing move through here, you've talked about it a little bit here. You've talked about, hey, we're at a point now where it's not going to take a huge amount off during the pollination time, but we are going to see some curtailing of some of the yield that comes off that. So I guess talk a little bit about the weather pattern that you see developing right now and where you see that heading.
Certainly central west, central north, central northwest, Canadian prairies, for sure. We're going to continue to see unfavorable conditions here. And in those areas, we're going to see degradation of crops. The problem for the market psychology is, though, because of those barrel rains that we got in the east and because this heat isn't quite getting into Iowa and the eastern grain belts, kind of just missing it, the market is content with staying with the bearish narrative for now, at least on corn. And of course, everything's about looking ahead. We are looking at we're really not looking, the way I'm looking at things, we're really not looking at potentially heat coming into that core grain belt until later in the month. Something called the global angular momentum. It's something we've talked on your show before. Yep. It oscillates a lot. It's a volatile indicator. It's sort of a measure of whether the atmosphere is acting like El Nino or El Nino. Back in June, when we had that high heat in mid-late June, we had a very negative global angular momentum. That's La Nina-like. And then but now we're going to get this big push in the global angular momentum to a positive reading here. And that tends to keep the high heat away from the core grain belt. It doesn't look like it's going to last very long. Looks like it's just going to be into the end of the month. And then all the models are showing it's going to nosedive hard down into the middle, late August. So if the global angular momentum does do that, and I think it's going to do that, it sets up more of a problem. Like right now, the problem is the West, but the West is not enough to overcome the bearishness of the East, at least right now. But a hot August, if it moves this way, would certainly be an issue for soybeans. Now, soybeans, I am least fundamentally attracted to. I believe the fundamentals for corn and wheat are much more solid. The exports on soybeans have not been that good. In fact, but in corn and wheat, they've been phenomenal. But from a weather perspective only, a weather catalyst, you can't hurt the wheat crop anymore in terms of winter wheat. Spring wheat crop you could, but in terms of winter wheat, you can't. You really can't take too much off the corn crop anymore because the core grain belt's going to be okay. But you could still take a huge chunk off of the soybean yield. And I think if we're looking for what would be a weather catalyst to get some of this bearishness in the grain markets to want to buy back, it just has to be one market doing it, and you'll get a contagion effect in the others, right? Mm-hmm. So if all of a sudden we're seeing a bullseye 100-degree temps in Iowa in the first week of August or the second week of August, soybeans are likely going to react strongly to the upside on that. And that's all you would need for them to say, well, shoot, why the heck, we don't want to be short corn or wheat either, right? So that's something to really pay attention to in terms of what it might mean for soybeans. I don't think the northwestern heat is enough to overcome the lack of it in the center of the country. I would say the Canadian prairies issue, however, for oats, for canola, I would be thinking like those markets could react because we don't really grow a lot of oats here. We don't grow a lot of canola here. That's strictly a Canadian prairies kind of deal. I would think that disproportionately would be where, if I was expecting a reaction from this heat in the West staying through the end of the month, which I think it will, I'd be looking at potentially oats or canola getting a little excited here. I don't think soybeans yet are going to react to it because it's not coming into the core. But if we get into that last week of July and the global angular momentum continues to show it's going to take a nosedive, then all the models are going to start showing this heat coming in, and you know, that's going to be something that the soybean market would have to pay attention to, and it also might trigger some bigger exports, because right now I think everyone's just holding back on soybeans because they don't think they need to jump the gun, because Brazil, you know, still has quite a few down there to sell, you know.
Right. All right, I got about about 5 minutes left here, real quick. Sean, we had a listener send a message in asking about New Zealand dairy expansion, and basically the question is not New Zealand dairy expanding. Thanks again. What's the question? I guess, Sean, as you take a look at that situation there, I will share this graph that you sent me.
Sure.
So we can talk about that, but talk a little bit about what you see happening with what's going on in the New Zealand dairy crop.
I think everyone needs to understand that dairy historically has always been driven by Chinese imports of milk powder, especially. And in the last couple of years, there's been a massive oversupply of milk in China. The Chinese handed a bunch of money to the dairy producers, and I think we've had 17 or 18 months in a row of milk declines in China. 18 months. Now that's a bear market. 18 straight months. Yeah. Now that is a bear market. Holy cow. And we're back to where we were 10 years ago in milk prices in China. In fact, they have overproduced milk so much that they're actually taking the fluid milk, making milk powder out of it, storing it, because they don't know what to do with the milk that they're producing. Finally, though, the government's ran out of money to give them. If you look at the publicly traded companies, the Chinese publicly traded companies that make milk, that put out earnings on a semi-annual basis, you can actually listen to their conference calls, and they're just losing tons. And these are the best producers, losing tons of money. Everyone's liquidating the herd. The beef price and the cattle price in China is crashing because of this massive dairy herd liquidation in China. So the process of ameliorating this oversupply is underway, but it's going to take probably a year to get it to where we either back into balance in China, or we're under, and we're in a supply mismatch, a shortage again. So the problem is the number one seller of milk derivative products in China is New Zealand. Mm-hmm. And New Zealand had been growing production rapidly. I don't know if you have that chart, but they have been showing that production rapidly.
Yeah, I'm trying to get it up here. It's not wanting to.
It's all right.
Have some technical issues.
But the last 5 or 6 years, their production is flat to down. First of all, we've had the reason is there's a limit to how much they can actually increase milk in New Zealand. There's physical limitations. They primarily graze their dairy, and that's how their dairy, they don't really feed them corn and meal and that sort of thing. So, there's a limit to how much they can actually grow. And the prices have been kind of unattractive because China's not been buying. So their milk efficiency has been down. And so they're just not in the business of growing production. They haven't been. And I don't see them growing it anytime soon. Certainly, not with the kind of lack of demand coming out of China anytime soon. In the U.S., however, we have avian flu. And avian flu has caused a dramatic supply shock here in the U.S. that's ongoing. And while we can't know for sure, but probably we're going to get a new strain that's going to come next winter and spring to impact the dairy herd yet again. That's usually how these things work. It's a couple of waves that you come through before it kind of dies down. And so this has caused the U.S. milk price to actually be fairly strong. I mean, we've had $20 to $21 class 3, class 4 milk, against no Chinese demand. It's extraordinary, but it's a result of this dramatic supply shock from avian flu. Thank goodness. I want to say thank goodness. it's not good that we're losing production due to avian flu. But if it wasn't for that, Casey, the U.S. milk price would be considerably lower today.
Yeah.
But that's where we're at. It's not going to go away. That's the reality situation. And it is providing a bullish tailwind for milk prices in the U.S. and should continue to do so. But keep in mind, we have this battle. China bearish, U.S. bullish, and then who's in the middle? The U.S. consumer. How much are they going to buy? What kind of health are they in? The U.S. economy, interest rates, all the things that we talk about with the Federal Reserve, is where the scale gets tipped a little bit. And so it's a complicated story, but the bottom line is New Zealand, which had been a harbinger of ever increasing supply, has stopped being that. And I actually think that they're going to continue to be flattened down for the foreseeable future. I see no incentive there to grow milk production anytime soon. What I will say about the U.S., because of the dramatic shortage of beef cows, that's going to continue to be there, and the dramatic breeding of dairy cows to beef cows, the dairy replacement supply is at the lowest I've ever seen. Dairy replacement prices at a time when the dairy sector is not wanting to expand are sky high. If and when we get higher prices and the U.S. dairy producer wants to expand again, I don't believe they have the animals to buy to grow the herd. And so you could find yourself somewhere in 2025 needing more production and not being able to turn the switch on. And that's the possibility for 2025. And if China erodes their oversupply in 25 and start buying some milk again, I mean, there's an interesting scenario here on milk prices for 25. I think from now into the fourth quarter, it's going to be tough to get too much higher than 2021 with what I've just said. But from the fourth quarter onward, things can get considerably more interesting to the upside.
For sure. All right, Sean, appreciate you being a podcast, man. Folks want to reach out to you, get more information about what you're doing at Hackett Financial. What's the best way to do that?
Our Twitter page is at Faradex11. We have a LinkedIn page, of course. We have a website, Hackett, Hackett advisors.com. We're not habitual social media personalities at all. I mean, we try to keep a low profile, but from time to time, you can see some of our thoughts in some of those places. So,
Sean, appreciate you being the podcast, man. We'll try to do this again on Thursday.
Sounds good, Casey. Thanks so much.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Check out the YouTube channel, which is the Moving Iron Podcast YouTube channel. And while you still can, go to TikTok and see us over there. You can go to movingironllc.com for everything Moving Iron related. So with that, I'm Casey Seymour with Sean Hackett. Let's go smart, folks. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment. but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving higher in the 21st century.